Well, good morning, everyone. This is the financial aspects of buying a franchise. This is Jim Gleason, and with me this morning is Kevin Hall.
Good morning.
You there, Kevin?
Yep, I am.
Morning. Just kind of a recap. Uh, uh, we are going to be talking today about the financial aspects of buying a franchise, and that's why we have Kevin here. Kevin is a banker with the State Bank of Liston, a commercial banker. He's been in the banking industry for 14 years, last 7 years as a commercial lender. And he's been with a couple other banks, regional, global banks, as well as State Bank of Liston, which is a regional bank. And part of what Kevin's going to be talking about today has to do with the Small Business Administration and how they assist with banking or with financing and making it a little bit easier. And so I thought as part of what we're going to talk about today, we would cover a couple of the other resources that are available through the SBA. So one of those resources, if I can get my screen to move, what's going on here? My screen does not want to move. Hang on, let's see. Huh, my screen is frozen up. I apologize about that. Hang on, technical help is here. There we go. Which I don't. Anyway, we'll see if we get to the next slide after this. So, the first one I want to talk about is SCORE, which is called. It used to stand for the Service Corps of Retired Executives, SCORE, and it's an all-volunteer organization, and used to be retired executives, people that had a lot of experience in business, and they would provide the services to people that were wanting to start businesses to help develop their businesses. So some of the things that SCORE does, it promotes the success of small businesses in central Indiana. It will assist, SCORE will assist with startups or existing businesses. They will help somebody that's wanting to start a business. They'll help them with business plans, marketing plans, operational issues, HR issues, or other business issues. They also have a number of workshops that include workshops in starting a business. The local chapter here in Indianapolis has about 40 volunteers. In fact, I was a SCORE mentor for about 7 years. So it's a resource that's available. It's a free resource through the Small Business Administration. Another resource that's similar is the Indiana Small Business Development Centers. As opposed to SCORE, which is all volunteer, Indiana Business Development Centers, or ISBDC, as paid full-time staff. They also assist with startups or existing businesses. They work with business plans, and part of the reason I brought this up with both SCORE and the ISBDC is that business plan, if you're going to look at getting into a business, franchise business in this case, and you want to get some bank financing, the bank's going to ask you to put together a business plan. And depending on your experience in that area, that could be somewhat of a daunting task. And so ISBDC and SCORE both, they have folks that can help you develop those business plans. In fact, I might even talk a little bit about a young couple that I helped get in a franchise about 6 or 7 years ago, military couple, that they needed to develop a business plan. So I referred them to the Indiana Small Business Development Center, and they helped them develop the business plan and helped them secure financing through the State Bank of Liston. And they are in business today, and they started out with 1 territory, and they now have 3 territories. So that's kind of a fun thing to talk about. In addition to a business plan, ISBDC can also help with marketing plans, operational issues, HR issues, and other business issues. One of the things that's a little bit different about ISBDC as opposed to SCORE is ISBDC does have access to several databases. For example, if you need information about the demographics in your area, and if you have the type of population that will support the business that you're looking at or the franchise you're looking at, they can help you with that. Kind of as a side note, the franchise, if you're looking at any particular franchise, they probably know what the demographics they're going to need in order to support a franchise in any particular area, and if your area has the demographics to support that franchise. In fact, franchises pretty much live and die by the demographics, so that's an important piece that they provide. ISBDC also has workshops starting a business. The local ISBDC has a director and three full-time consultants, and these three full-time consultants have a broad range of experience. One of the things I failed to mention with SCORE is they have a number of subject matter experts. They have experts in import-export, banking, and just a whole bunch of different things because they have a number of different volunteers that have that that expertise, where with ISBDC you have three full-time counselors, consultants, excuse me, that have a broad range of experience. The third one I'm going to let Kevin talk to about Bankable. So Kevin, I'll let you take it from here.
Yeah, so Bankable is powered by Flagship Enterprises. It's out of Anderson. They're a nonprofit lender. They have paid staff. They do have some volunteers when it gets into underwriting or decisioning on a credit. But they started back in 2010. Since then, they've closed over 700,000 loans, and they've lent out a total of about 22 million to small businesses. And those on average are about $75,000 or $80,000 loans that help with working capital or those initial startup costs for folks. So again, they assist obviously with startups and with existing businesses. I've had kind of both sides of that. We had a small coffee shop that was going to be an independent, and it was something just due to just area and background of the owners not having a great deal of experience as a barista or anything specific with coffee. We ended up referring to Bankable, and they actually did help them out with a $200,000 small community advantage loan to get them started and up and running, as well as an existing client where he was just trying to consolidate some unsecured credit card debt that has just lingered for years and years. And so it was something where we were maximized with what we could lend to him from a loan perspective. So Bankable was able to give him an option to consolidate some of these high interest credit cards into a loan to get those paid back and get his payment lowered and on a term where he would pay that back and not just keep paying interest over and over and over. So they provide excess capital, like we're saying. They also can provide some search optimization, some of the online aspects of a business that's very crucial nowadays. ISBDC and SCORE could do some of the same for you. Other economic resources as well. This is a free setup to get and use them as a resource. There is closing cost involved, which you get into when you actually get to securing loans for your business and franchise. As far as micro loans, so up to 50,000 is a micro loan. Generally, those go out to 6 years, and their percentage rates are a little higher than what you get from the bank. And those could be for equipment, just general working capital, payroll as you're starting your business. Their other piece really is the higher dollar loans, where they have done enough of them where SBA has said you can now do community advantage loans. They can do both these loan products statewide for Indiana. So those would go from 50,000 up to 250,000, and depending on what kind of collateral or what the request is, be it real estate or just equipment or that space, it could go up to 20 years, depending on what's backing those loans with the higher dollar amounts. So
yeah, something I'm sorry. Go ahead.
Go ahead. Yeah, go ahead, Jim.
I was just going to say, recently we had a situation with a company that it's not a franchise, but it was listed for sale through Indiana Business Advisors here. And I didn't introduce myself. I'm with Indiana Business Advisors, by the way. And I was working with Kevin on it, and he referred it to Bankable, and we're just about ready to secure that and get that situation closed. In working with the folks at Bankable, one of the statements that they made is banks have certain criteria. Our criteria are a little bit broader, which allows us to have a little bit more flexibility in working with people. So I think that's an important piece. Also, one other thing that I forgot to mention at the beginning, I encourage anybody that's listening, if you have any questions, to please type those in, and we'll be glad to address those at the end. So, okay, Kevin, I'll let you talk more about your organization.
I was going to wrap up just a little bit on Bankable as well. As I just like them as a resource, because like I said, if it's something where for whatever reason with guarantor, borrower, the risk appetite at that time is just something that's a little outside the box, as Jim just stated, it's nice to have a resource where it's maybe no, not right now, based on where things stand, but it doesn't mean it's a no down the road. And Bankable is just that. That's their whole goal, is to get someone where their credit is improved. They've started to get historical numbers in where they could give them back to the bank for that next stage of growth or to maintain their business. They do have a loan grader, which is kind of neat. I'm signed in as a lender for them. So a micro loan grader where we can put in a person's ballpark credit score, their name, their dollar amount, net worth, some other items we can get into or touch base on if you have questions about. But it'll then kick out and say, okay, based on what you're asking and the information you've given, we have approved loans in this remark, and it grades A, B, C, D. So it's kind of nice that you can get a kind of an initial feel for, do they like those deals or not? Have they completed and closed on loans of that size? So now I'll jump into the bank part of it.
As you were talking there, Kevin, I was just wondering, how quickly does Bankable typically, in your experience, let people know if they're going to qualify for a loan? I think that's something that people might be interested in.
I would say a couple weeks. They have loan committee for them, depending on the request. If it's under 50,000, that micro loan, that could be within days, honestly, just because they've done so many and it is scored out essentially with what you're requesting. If it gets into that 50 to 250,000, that could be a couple weeks, just depending on timing of when they get all your information and when they can send it to their loan committee to review and get a credit decision. So that's a good question.
Yeah, and something that's kind of interesting when Kevin said it'd be a couple of weeks, depending on how long it takes them to get the information. Quite often, what I've experienced is that sometimes there's delays in some of these things, and it has to do with the bank or the Bankable is waiting for information from the person that's inquiring or at least trying to get the loan. And so it's not that the organization is delaying it. It's been delayed by not getting the information needed. I don't know what your experience in that is, Kevin.
Yep, that's key. And it happens a lot of times. Just there's a lot of moving parts, and with a new business, there's a lot of pieces with SBA or the bank wants to get comfortable with. So you may submit everything on that checklist, but then when you dig into it, there's something else where we need another piece of information that, just wasn't gathered or thought of until we really got into understanding and reading through the business plan for the franchise or the franchise agreement. Even there may be questions that come up when we look through that. So.
Okay. All right. Okay.
So banking, obviously it's either private or public bank lending institutions. They can offer your most competitive rates or terms unless you're borrowing from a family that's just not going to charge you much for it. A lot of times with banking too, we're looking for a whole relationship, especially since 08, 09. A lot of banks were doing just loans and not looking for the deposit relationships so much. So that's changed quite a bit, where we're really looking to be your lending institution, have your depository accounts with us, as well as any potential cash management needs. With franchises, it just depends on how they're set up with running credit cards, things of that nature. Sometimes they already have vendors in place that'll be spelled out in your agreement as far as who you're going to use or particular cost. Sometimes you can go with whoever you want. So obviously the bank would love to help out with some of those options. All shapes and sizes, having critical roles with different size banks. So as Jim mentioned, so State Bank of Liston, we're a community bank. Then you have regional, national, global banks. So each one in kind of those four pillars of banking really do have different clientele and niches and appetites for the type of loans they will do. Generally with community banks, we will go outside of the box a little bit of some of the bigger ones just because of our appetite and our size. We can just set up different things that fit for the borrower in the bank, where other areas they may have a particular credit or product depending on the size of a credit to do that. So also with portfolio risk, as far as just what industry you're going into, if a bank has a lot of a certain industry, they may say, we're just not going to do any more of those, whether it be a restaurant, a particular type of franchise restaurant. If they have a lot of them, they may say, okay, we're going to just not do this particular one for a while because we've loaded up and we have so many of those in our credit. We want to make sure we're diversifying too on what we're bringing into our credit box. So appetite there. So I was going to get into the 5 C's of credit.
Yeah. Before we jump there, one of the things that I've experienced in being a franchise broker is there are some bank, and Kevin mentioned this, but certain banks have certain appetites for certain types of industries. So just because one bank if you were to apply for a loan with one bank, it might not go through with that bank, but you go to another bank and it might go through because the other bank might have a more broad range of the businesses they work with, or the particular bank, the first one you went to, just doesn't want to deal with that industry, like Kevin said. So just keep that in mind. Just because yeah, one bank tells you no, it doesn't mean that every bank's going to tell you no.
Right, right.
So,
So when
so
a bank's looking at your credit request, your business plan, and everything, we're really looking at the 5 C's of credit. This is something that goes through commercial lenders. Generally, will get some kind of training through different avenues for this. So it's just the system and way lenders and banks will gauge the credit worthiness of a borrower. So character really comes down to you, the individual. What's your resume? What's your story? Just your credibility and background to go into this franchise, and how much support the franchise can offer too, especially in that regard with training, their proven concept or experience, and the demographic and area they're going into for your franchise.
hey, Kevin, could you
Capacity,
explain? Kevin, could you
yeah.
explain a little bit more about the idea of industry experience background and how that's changed somewhat in banking? I know in the past sometimes it was specific to a specific industry, but some banks have expanded that a little bit broader. Can you talk a little bit about that?
Yeah, so rule of thumb in the past would be if you've had 5 years direct experience in that type of particular business, be it a restaurant, you've been a manager, or if it's a mechanic franchise of that nature, like a Midas or something, a Meineke, then you've obviously worked in one or been a general manager within that organization, and then you're stepping out to open your own. I think a lot of that has shifted though, just based on general business acumen. Have you owned a business or been in a responsibility or had a role that has a lot of the responsibility with your payables and where you're receiving cash from, just overall management of the business. And if the franchise offers their training program and it's been proven, then you may not need as much of that 5 years experience anymore. It is definitely getting broader just based on overall how much have you accumulated and what skin in the game essentially. If we even drop down here under capital, what does your net worth look like and your overall experience as a business owner, just managing your own funds, and how does that equate to this franchise? So really making those dots connect and what their training program is.
Yeah, I wanted to bring that up because when I started in the franchise industry about 12 years ago or so now, I found that it was difficult to find banks that would be willing to finance somebody unless they had direct industry experience. And that was somewhat counter to what a lot of franchises like, because a lot of franchises don't want to find, or there are some that really will not take people that have direct industry experience, because with that industry experience, that person may think they have a better way to do it than the franchise, and doesn't they don't want to follow the franchise's system. But over the years, what's happened is that uh, we find banks that you're there, as Kevin said, they're looking for somebody that has management experience. It doesn't have to necessarily be directly in that industry, or have some other experience that crosses over into the industry rather than direct industry experience. Again, that was a problem before, because a lot of franchises, in fact, statistically, there's only about 25% of people that own franchises even have industry experience within what the franchise industry is. So that's an important point for people to understand.
Yeah, yeah. Jumping into number two with capacity. So that's really the ability to repay the loan, the cash flow, and where the bank's going to run their numbers. Call it a debt service coverage ratio, just to make sure you can service the loan and all your other expenses to have a business. A crucial part with a franchise here is within their agreement or with other franchisees, if you can get their information to just realize historically how they're operating and in their area of demographics, so that you can leverage that to have some pretty kind of spot on but conservative projections, because we want to see at what point are you going to be making money, and again, just making sure you can cover everything you need to plus the bank's loan within your projections. And that's something really where when you get into it, Score and ISBDC, or even Bankable, some of these resources you can go to really drive home, and they can ask questions and critique even the franchise agreements or what you have drafted up, just so when you come to the bank, you're definitely prepared to walk through where's your break even analysis and just where do you think you're really going to fall on it.
And quite often the franchisor will help a candidate, somebody that's looking at the franchise with pro formas based upon their experience with with their franchise. So the franchisor quite often can help with some of those break even and other analysis that you may need.
Right, right. Next piece, capital. So that's really the cash from the borrower to inject and support the business, as well as the excess capital, dry powder, if you will, that'll help further support the business. So the rule of thumb in the past has been 20%. That was just for years and years. It was skin in the game. If you want 100,000 for to start your business, that's what you need to open the doors. The bank's going to expect you to put 20,000 in, and the bank would do 80. That's since shifted, and even more recently, it kind of dropped down to 15% for a short stint. And now it's the SBA is generally saying 10%. That doesn't necessarily mean the bank's going to be good with 10%. Again, just depending on risk, industry, what the experience of that franchise has been, and how they've been active in the market, that may still be at 15 or 20%, but you could get down to that 10% mark. And again, a lot of that could go to the bank's appetite and just where things stand currently in the market. So, and that would be information we could find on a personal financial statement. I know we're going to send out a couple things after this call. One is that personal financial. That's a crucial piece just to understand where you are today and what kind of net worth you have and the assets you have to help this business if it needs to be that way. Next is collateral. So assets that would back the loan, be it business equipment, real estate, or even personal real estate. A lot of times if you have some equity in your home, then that is something where the SBA would have the bank take a look at taking a lien on that real estate. And that's really just to make sure you can't say, if it was a fitness studio, at the end of the day, if things don't work out, that you can just drop the keys off and say, see you later, you own a fitness studio now. It ties you in to say, how can we figure this out and get this loan repaid is really the catch there. So, and then overall conditions, again, just the industry, economic, demographics, a lot of that's going to be in your franchise agreements that you would go through. So, and I would say too, a big thing is just barriers to entry with different ones, which, you know, Jim would be good to leverage there, as well as just the franchisor or other franchisees on their specific market, or just in general, their industry. What are the barriers really to get into this, and what does that cost?
Yeah.
I mean, I guess one of my all-time favorite clients is a IT company. We started out with a unsecured $25,000 line of credit just to help him with working capital and hiring staff. Within 8 months, he had grown and shown some historical numbers that were doing better than projections. So then we increased it to $45,000. A year later, we increased it to $150,000, and then within the next year, we got it up to $250,000. So we're at about year 2 and maybe 6 months. We actually went with a conventional line of credit and stepped out of SBA financing. He's doing quite well now, and he's kind of always exceeded his projections and planning. I think the best part was, though, he leveraged his resources, like SCORE, and just myself, and saying, what's the bank going to look at? When you look to underwrite my loan, or what do I need to show on my balance sheet or on my profit and loss in order to keep growing? So, so SBA versus conventional bank. Loan amounts, you can read that for yourself. The interest rate, so that prime, that's Wall Street Journal prime. If you Google it, you'll find that today it's at 5.5. Again, so typically your rates are going to be a little higher with SBA compared to bank financing. Terms up to 10 years, that's generally just that 7A working capital. A conventional bank for a business is 3 to 5 years. Useful life if it's equipment. So if it lasts 10 years, maybe we'd push that out to 10 years. Covenants are really those loan requirements that the bank can put some mandates on controlling and reporting, just so we understand what's going on with the business. There's negative and positive covenants. So a negative would be that you could have no other debt. We'd limit no distributions to the owner of the business if they've had so much income. We can prevent other investments too within the covenants we can write. And then there's affirmative covenants like having insurance. One of the main ones is just getting updated financials on a yearly basis or even quarterly with financial statements, but be it tax returns and a personal financial statement, where SBA is not required there. bank collateral, we've kind of talked about that. A lot of these are pretty, guarantees are pretty standard across the board, be it SBA or not anymore, where you're going to personally guarantee it. So if business can't come up with cash flow, then you would personally see that the payments are getting made or figure out how we can get the loan repaid. Uses are there. So I think I'm going to touch on very much more there on that slide, Jim.
Okay.
And then facilities, so term loan or a line of credit, what do you need? If we look at it from a timing perspective, loans are generally a one-time use, or like now I have a fitness studio that's doing their build out, and so we have a key mark line it's at 300,000, but as they're going through this build out phase, instead of having all 300 taken at one time, they can take different draws, different amounts as they're buying equipment, doing different things within the interior of their studio. So then at the end, it will turn into a term loan. But until then, we have interest only payments, which helps them out. And they're only paying on that portion they're using as they're expanding their studio. So then it will flip to a term loan. A line of credit is usually multiple use. So that would be as you're growing, it's something you would set up ahead of time. So you could use it for your growth with employees, marketing, again, all the other kind of little things that can come up as you're growing your franchise. Payments for loans, you're going to have principal and interest payments generally. And then for lines of credit, it's going to be interest only monthly. The terms, we've kind of touched on this too already. For term loans, bank or SBA, you're generally looking at 5 years or maybe 7 or 10, depending on what you're using the loans for. And if it's equipment, how long is its useful life? How long will that last? Lines of credit are usually 1 year to 2 years. Conventionally, SBA can put those out 7 years. Costs we've kind of covered. And really a lot of times in the previous one that I have set up as well is that we'll do not only a term loan, but a line of credit to help with working capital. So we do a combination of what do you need to get the doors open? And then as we've planned out and look at your projections, are you going to need some additional capital? So we go ahead and set that up from the beginning so we don't have to have hurdles or anything down the road. You have that excess cash you can pull in if something comes up, whether it be a deal to order inventory or, again, growing in staff or a marketing plan, something of that nature. You have some excess funds there. And that's really looking at statistics. Not having enough capital is one of the main reasons that businesses fail. Aside from that, it's really just seeing that there really is no need for the service or product that's out there for franchise and looking at some of the statistics. But capital is definitely one of the main ones, is not planning enough to have that sideline cash as you grow or have something come up. So.
Yeah, another, when as we're talking about specifically franchises, working capital with almost any business is one of the biggest reasons for business failure, but specifically with franchises, a couple other reasons that sometimes people get into a franchise that's just not a good fit for them, or that they get into a franchise, they buy the systems, and then they think they can do it better than the franchise, and so they try to do it in a way that's different than the franchise is outlined, and more often than not, they fail at it. So that's, along with working capital, a couple other reasons why businesses, particularly franchises, might fail. So,
right. So SBA, the U.S. Small Business Administration, State Bank of Liston, we're a preferred lender with them. So that means we can go up to. Oh, go ahead.
Yeah, go ahead. I was just going to say, what does that mean? You're explaining it.
Yep. So a preferred lender means that we have done enough of these SBA loans that we can now go up to $350,000 using all of our own internal credit forms. We just go online. Essentially with SBA, they have a system set up where we just input our data from the loan request, and then it'll spit out a score, and then we can move on with an SBA package, and we do everything in-house. So we don't actually send stuff to SBA, because to obtain an SBA loan, you go through a bank. It's not someone that a borrower or a franchise can just go straight to SBA. You have to go through the bank to get kind of this program set up, as they utilize the banks really to get the word out and do these types of loans. So, and again, a lot of times, why does the bank use it, or why does SBA exist, is to help start small businesses, because a lot of times if you're looking at for a franchise, there's retail space and you don't have the real estate, you're renting that. Well, that takes away some of the collateral. So there's not enough stuff that the business has to back the loan request. So that's where SBA comes in, because it's like insurance for the bank. they guarantee a portion of that loan, where if something happens and the business does fail, as long as the bank's going through their process, they can recoup some money, and SBA will actually help pay for part of that loss on the loan for the bank. So
Hey,
that's why you would use it.
hey, Kevin, typically what percent does the SBA usually guarantee? What percentage of the loan?
The lowest would be 50%. Generally, it's in that 70 to 80%
Okay. Okay. And
of a guarantee on it.
then I've talked to people in the past that sometimes they say, well, if I fail on the loan, I got an SBA loan, the SBA is going to cover 70% of that, so I don't have to worry about paying that 70% back. How would you respond to that?
No, that is not, yeah, that's not accurate. So essentially, if something fails, the bank's going to go through whatever assets we had listed or took to do that loan. We're going to try to liquidate and pay that back. And then that difference is still something we're going to work with borrower to try to get that repaid. And then at that point, SBA could potentially come back, write a check, but it's not, it's not in regards to what you're saying with the process.
Yeah, you're not off the hook. If you got an SBA loan, you're still on the hook for the whole loan. So it's not
Right.
it's not a bailout. Okay, go ahead. Sorry,
Correct.
Kevin.
No, yep, that's right. That's right. So SBA loans on the next slide. Again, the banks are your lending partner to the loan to the small business. This is you.
Okay.
Yeah, I would just say so. From our perspective, we've done SBA loans for, I already mentioned one with IT companies, franchises with fitness studios, restaurants, service industry, be it window washers are one of them, mechanic shops. So we've kind of got a nice nucleus of different industries where we've done some SBA financing for.
Okay, you want kind of a recap here?
Yeah, so when we're looking at franchising, financing, and we're going likely through SBA, they offer competitive terms. We kind of touched on that before. If you recall, the bank's looking probably at 5 years, 3 to 5 years, where SBA will let us take it out to 7, maybe 10. That's very helpful for the business because then you're not paying, obviously, on a shorter term. Your monthly payment obligation is going to go down. There's a lot of counseling education through SBA and the steps you have to go through as you're starting a franchise. So it's very helpful. It's a lot of work, obviously, but some of these steps with projections in your business plan really help you hone in and be successful as a business owner when you're starting out. Unique benefits, again, we kind of covered the lower payments, flexible overhead requirements, and again, no collateral needed. It's good to have some collateral, but again, it's something with SBA. There's no mandate or credit policy that says you have to have this percentage. They're all about, again, helping small businesses grow, staffing. If you're creating jobs with your small business, that's a big piece for them, is to obviously grow that segment. That's one of the biggest parts of the U.S. industry. So.
Okay. Anything else specifically that you want to finish up here, Kevin? We do have a couple questions that bring up here.
Yeah, I just think the biggest thing is just being a resource. So using the ISBDC, using SCORE, you could even initially start with the bank just to get an idea of what they're thinking and then go to these other resources. You never know where things are going to go, is my perspective on it. So I'd love to have the conversations and just figure out kind of what a franchise entails, what it's needed to get started, what barriers there are, and then just try to provide those resources to get folks up and running.
Yeah, and from my perspective, both as a franchise consultant and as a business broker, over the years, I've had people come to me and look at wanting to buy a business. They really didn't know what they wanted. This whole process was new to them. So one of the first things I generally try to do is introduce them to a banker, just to sit down and to understand what the banker's thinking, what a bank's looking for, and also to develop that banking relationship. So quite often I've referred folks to Kevin, just to have an initial conversation, no obligation, just to really understand this whole process of financing. Because more often than not, when somebody gets into a business, whether it's a franchise, whether it's a buying a business, or even starting your own business, more often than not, you're probably going to need some help with some financing, and that's where you go to the bank. So I found that to be a very useful way for people to start thinking about what it's going to take it to get into a business. So
Yeah, I would
Um,
just, you just made me think on timing. So we covered on kind of bankables process if they're going to
yeah,
decision on
yeah,
a loan. So as far as the bank's SBA process, it depends on what you're doing and what's involved. As far as the lease goes or insurance, they could be just a couple weeks depending on the situation. If it's pretty streamlined, but because of a lot of times there's a lease involved with franchises, there's some different agreements that have to be put forth with SBA with that and insurance. Generally, those are the two things that'll kind of be the hang up is we may get an approval and be working on final due diligence items within a couple weeks, but then back and forth with landlord on a landlord release waiver and or getting insurance finalized and the bank set up to be on that insurance policy. That generally takes a couple weeks as well. So it's already into that really 30, probably 45 days is a standard time frame to get financing done through SBA. Conventionally, you're probably looking a couple weeks shorter depending on, again, the collateral. If there's real estate involved, it generally always takes a little longer because of the items that come up with appraisals and insurance.
okay. A couple questions we have here, Kevin. One of them is, what kind of credit score is somebody going to need to typically, the typical credit score to secure a loan?
Yeah, so the rule of thumb there, because the scoring takes into account a lot of different factors, but generally you need to have at least a 650 or better credit score. We've seen them go through at 680s. And with SBA, when it scores out, it does its own thing. So it takes into account your personal credit score, industry, length of time of ownership and knowledge. It kind of jumbles all that into its own scoring model, and then it gives us that score. So you need a 145 on the SBA scoring standpoint to get officially approved. The ones I've had lately have been scoring out in the 180s. We had one that was the highest score that my manager put through probably ever, and it was in the 200s. The individual had a 800 some odd credit score and scored out really well. So
Okay, and to be clear, that 145 or 180 were not the credit scores. That was the score the bank determined after
correct.
looking at credit score and other information.
Right. That's when we go into SBA's system and input everything for this request. That's what SBA has their own scoring model
Yeah.
once we put in all the data for the loan request. Yeah.
Yeah, I just didn't want somebody to get confused to think that 145 credit score is going to get you a loan. So,
Yeah. Yeah.
um, here's another question. It had to do with the covenants that you were talking about earlier, Kevin. It said, why would a bank put in a covenant that an owner cannot take distributions out of the business?
Because we want to make sure that you're not depleting the business of funds it needs to really maintain and grow to repay our loan. So if you're taking everything out of the business for your own lifestyle, there's some concerns that can come up there from a character standpoint too of where's this business going? Where's the owner going with their lifestyle? So we can put a mandate that if as long as you're meeting your debt service coverage ratio, you can take distributions, but we may limit that or put that in place for a year, and that could change. We could do a renewal and decide, okay, we're going to take this covenant off, but just for the initial start, we may say no distributions for the first year, or it could say unless you're meeting this debt service coverage ratio, you cannot take distributions. Again, that's just to make sure there's cash flow and income in there to repay our loan and keep the business operational.
Yeah,
Hopefully
so
that addresses your question.
typically a distribution would be coming out of cash that might be available for working capital and for paying back the loan and other things like that, correct?
Correct. Correct.
So, okay, okay,
Yeah.
okay. We did get a question that can't really address in this. It was how does somebody start a franchise? If whoever asked that question would like to contact me directly at my phone number here or send me an email, I'll be glad to discuss that with you because it's a broad question that probably requires me to ask some additional questions to really understand what you're really asking here. So anyway, appreciate y'all being on today. Hope you found this to be useful. We'll be setting up another webinar geared around franchising probably here in the next month or so. So feel free to contact Kevin or myself if you have any questions regarding franchising, or anything to do with financing, whether it's for a franchise, whether it might be for an existing business, starting a business, or other things like that. I'm sure Kevin would be glad to help you with that. You have any final
Yeah.
closing comments, Kevin?
No, again, just leverage your resources. You have our name and contact information now. So again, anything, love to have conversations and just kind of learn where people are with growing their franchise or a business that they're going to start up.
Okay. Thanks for your
Thanks,
time
Jim.
today, Kevin. Thanks everybody that was on today.
Thank you.